Welcome back. You're tuned in to Chartbusters here on CNBC TV18. Well, let's get straight to our first management. We have packaging company Cosmo Films. They reported an operationally good set of numbers in the first quarter. Yes, the revenues were lower. The big positive was that the margins have expanded. Remember, the company has also moved into the pet care business, so they have plans to get into that business. And to understand how is the quarter that went by, what's the way ahead, and also why are they diversifying, we have Mr. Pankaj Poddar who joins us. Hi Pankaj, thanks so much for joining in. Well, let's focus on your numbers first. The numbers were good. You told us the last time around you're functioning at capacity utilization levels of 100%. Does that still hold? And also tell us what is the contribution coming in from your specialty business and what is the growth you're seeing out there?
Thanks, Nigel, and to all the viewers. We are 100% utilized, and our specialty has been growing phenomenally well. Last quarter, we grew by 20%, and we are taking our target to take this number to 70% latest by December 22.
Okay. What were the BOPP spreads? Yesterday, we had, the management of Uflex join in, said that in the first quarter it was close to around 70 and 65 odd. Might not sustain going forward. Is that the same for you?
Yeah, as far as polyester, you are right that the margins were phenomenally good. For BOPP, the margins were 28, 29. They were not phenomenally good, but they were good, I would say. And specifically in the month of April, they were good because, we were the first ones to, or the early ones to start the plant. And by that time, some of our competition could not start plant, and the demand was very good. There was a pent-up demand from March itself. And therefore, April month had a much better margin, which kind of marginalized and got back to normal levels. But what you could see in the performance is better margins in April and a very good growth on the specialty films.
All right. Pankaj, let's get a couple of more numbers going for you. You said that your spreads were at around 29 approximately in the first quarter. Give us a sense in what were the spreads, in the previous quarter, that's quarter 4. And also, as of today, is that holding out? Additionally, you spoke about, the specialty business. That would give you higher spreads, right? What is that?
Yes, so see, first on the margins, they were 1% higher versus last quarter. So last quarter was 26, 27, while this quarter was 29. And specialty, as I said, has grown by a good 20% in the last quarter. As far as sustainability of these margins, we are not seeing any new capacity coming up. And therefore, we feel that this year overall margins should remain around these levels.
That's interesting. You're saying from 27 it'll go to around 29, or it's not a very big move. If you could elaborate a little more on that, the change in spreads that you're talking about?
Yes, so see, last quarter, April month, as I said, was exceptionally well, and then May it rationalized to more normalized numbers. And, so it went from, on an average basis, 27 to 29 rupees. And we feel that during the entire year, it should stay between 25 to 30 rupees. There could be 1 or 2 off-season months, and there could be few months where the demand is very good. But on an average, we expect that the number should stay there.
And specialty spreads will be higher? If yes, how much?
Yeah, so specialty spreads are going up, and more so, the volumes of specialty is going up. So, we are at 50%. And we are targeting that by the end of this year, we should be somewhere between 57 to 60%.
Quantify that. What is the spread on specialty spreads, if you could give us a sense?
So on an average, they make 50 rupees. So they make roughly 2.5 times or 2 times more than the normal margin.
Fair point. We got that numbers, and the streets more or less factored that in as well. This year itself, we've seen a near doubling of your stock price, Pankaj. But now what the street does not like is you foraying into this pet care business. Perhaps there could be some opportunity, a big market, maybe market growth, etc. But how much money are you putting into this business? What sort of revenue do you expect from it?
So first, we see a very good jump happening in the pet care, especially post-COVID. There are no availability of pets in the market because, people are not able to socially meet others, and therefore they need somebody, a companion at their home. And therefore the pet demand is growing. As per the data, in last couple of years, the pet demand has grown by 22%, and there is no organized player in the entire market. And there are many unmet needs of the customer. They do not know where to get the breed from, which breed to buy, how to take care of the pet. So we are trying to meet the unmet needs of the customer.
Point, Pankaj.
In the first stage, we are looking at doing an online presence and a pilot launch in NCR region. And the capex that the capex plus OPEX that we are estimating in first 18 months is roughly 15 crores.
Okay.
So there's not a lot of money that we are putting in there. And if we are successful, then we'll go for the bigger launch at a country level.
You already have done some study, right? How big is the market right now? And if you put 15 crores, what will be the asset on?
Yes, so right now the total market is 5,000 crores, and next 5 years we expect this market to be at least 10 to 15,000 crores. Asset turnover typically in a B2C online business is very, very high, because this is not a very capex oriented business. The only money which will go is in brand building and setting up the basic infrastructure for the pet care perspective. So the asset turnovers are expected to be extremely high, but at this stage it is very difficult to comment on the exact numbers.
We get the fact that it's a 5,000 crore market growing to around 10,000, 15,000 crores, but that's the entire market. What are the products that you're looking to supply, and what's the market size for this, the potential revenue coming in from this?
So we are coming in omni-channel, both services and products as such, and we are coming in both online and offline. So we'll try to cover the entire strata of things. We'll try to make this market much more organized, whether it comes to breeding center, whether it comes to training, whether it comes to very specific needs of the pet and the pet families. So we'll come in areas which are unmet needs of the consumer today.
Okay, final question then. It's going to be difficult to give this number, but last year you did an EBITDA number of around 280 crores. This year in the first quarter already you have done around 85, 87 crores odd. And that's a growth of 50%. For the year, what kind of an EBITDA growth can you target? A projection that you could give us.
So first quarter we did around 93 crores, Nigel, and
the other income. We take it at around 90 crores. Okay, be that as it may.
Yeah.
Tell us, what kind of a growth can we look at in terms of EBITDA? Go ahead, Pankaj.
Yeah, we expect it to be much better than last year. We never give projections, but we are going very well. And all I can say is that this year is expected to be better than the last year.
Fair point there, Pankaj. Thanks a lot for stopping by and giving us all those details. The street will hold you on to the projections or the outlook that you're giving with regards to the performance, but importantly, how this new foray that you have gone into navigate through that would be an important thing to watch out for as well. The stock absolutely flat after a big rally that we've seen in this week, this month, and this year. With that, we'll slip into a short break. Another stock that's surging is Startup.